We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I am here today with Alex Mandaro. Did I get it right?
Almost. That was pretty close, though.
And we're trying to get these last names right, and sometimes there's some that are just a little more challenging than others. But anyway, so Alex is with us. He's with Rubicon Properties, and I know I'm going to go ahead and just introduce Alex as probably the youngest sponsor or even syndicator or anything attached to a syndication that we've ever had on the show, as Alex is 18 years old, but as you'll find out real quick, he knows what he's talking about. He understands the business, and he kind of specializes in procuring deals and finding deals for his company. So, Alex, welcome. How are you today?
Thank you for having me. I am excellent.
Awesome, man. That's great. So I want you to kind of start and tell us a little bit about yourself and what brought you to the real estate business. Although you know most of the time we hear stories of failures and this and that, and tried this and that, and now people ended up here. But obviously your story is going to have a little different shake to it. So go ahead and tell us what we need to hear.
Yeah, I would say I haven't really had enough time or experience to have many failures, so I'm still kind of starting and figuring things out. But from a very young age, you know, I'm already a young age, but from an even younger age, I was very business oriented, and I always knew that wherever I ended up in life, I wanted to be a business owner or kind of forge my own path.
Yep.
And, you know, I went through a bunch of different things. I tried online, like e-commerce. I tried day trading for a while, and none of those things really worked out. And I didn't really feel the kind of click that you feel like when you think, oh, this is right. And then about a year ago, I discovered real estate. And I always thought that real estate was one of those things where you had to have a lot of money. And so I thought that's going to be for later on. I don't have any money right now, so I can't operate in that space.
Sure.
And then I found out about syndication, and I thought, this is the most incredible thing I have ever heard. I didn't even know this was possible. And so over the past year or so, I've been networking and learning from people who are way smarter than me, and just kind of getting my feet into the water, learning how to put an investment together and how to go through the whole syndication process.
Awesome, man. That's I mean, you know, and there's a lot of people, and I guess your story is no different than mine or probably the next 2,000 people, in the regard that you know, we all kind of tripped into this business in some form or another, where we didn't really, you know, we had business, you know, ideas and business principles, but none of us really kind of knew exactly how to harness that and how to get it going and figure it out. Now, what did you so for the beginning syndicator out there that's listening, or the beginning somebody that's just starting to dab their toe in the water of this, what was the first thing that you studied, or the first kind of lesson that you took in order to that really kind of catapulted you forward?
Well, I think the best way for me to look at that is the best piece of advice that I was given when I started out. And it was almost counterintuitive when my friend told me this, but they said to kind of pick your lane and then really dig into that lane. And so, you know, in syndication, there's typically two sides that you find. There's the people who are good at finding deals and underwriting deals. And then there's the other side who's good at raising capital and building those relationships.
Yep.
I'm not really suited for the raising capital side. It's just not something that comes naturally to me. And so I found that I've been it's been easier, and I've been more successful, relatively successful up until this point when I just focus on finding deals and analyzing deals and, you know, bleeding out of my eyes with numbers.
Sure, sure, sure. And I actually had this discussion with somebody yesterday. You know, I actually, and of course, we want to hear more about your story, but I want to dig in there just a little bit on where you said to dig in. I had this discussion with somebody yesterday about defining your avatar, and it somewhat relates to that because I think so often in the very beginning, at least this is the way I saw it, was people jump in and they're like, "Oh my gosh, this is the greatest, neatest, most awesome thing I've ever found in my life," and then they're like, okay, and this is my story anyway. So I was like, all right, I think I want to focus on people who have jobs that are built around like systems, like very systematic people, like let's say engineers, doctors, maybe software engineers or software developers, people that were very routinized and very systematic about how they went about their day. All right, well then I started saying, okay, what if we focused a little bit more on maybe like let's go doctors, okay, and even that was too broad because what would happen is I would be like I would go over there and I would say, okay, hey, I'm getting ready to focus on doctors, and then I'd be like, well, shoot, what happens if this guy over here, this guy's an engineer, but what happens if I'm focused over here and I miss him? And then all of a sudden I missed this investor over here because I was focused over here. And instead of doing it like that, you have to like almost pull that onion back and get all the way in there to the middle and dig in. And that I think is more, and the other stuff will follow. You know what I'm saying? Don't you agree? I mean,
Oh
once you
yeah.
dig in and you stay, like you said, stay in your lane and just go and define what you want to do, and like, and then eventually my avatar got like a hobby, and then my avatar got like I don't say a sleep pattern, but I'm just saying, there's just different things that my avatar has now and that's where you pick up the surrounding people is by defining your avatar, finding out what they like. Because obviously, if you're like, let's say you're focused on doctors who are, I don't know, let's say, I don't know, gynecologists, whatever, and you get in there and you find out that most gynecologists like to play chess on Saturdays. When you start focusing on the people that play chess on Saturdays, that's going to pick up that people that are around that. So anyway,
Right.
I loved that you said that and that you dug in. That you said somebody had told you to dig in, and that's what you did. And obviously, if you've had some success doing that, you're ahead of the game for sure.
Yeah, and I mean, I think, the whole advice of get really specific, it doesn't really matter because there's 300 million people in America. Surely whatever subset you pick is going to have enough people. So if you say
Yep.
doctors, right, there's a lot of
Yep.
doctors. But if you say neurosurgeons who are 10 years from retirement,
Yep.
that's a whole group that obviously they probably have money and they need something to do to, sustain themselves in retirement. So getting specific and, niching down is really the best play because then you can focus on that one group of people rather than trying to cast a really large net and not getting anybody.
Correct. And then you're so worried. Well, the gentleman that I talked to yesterday, I was like, you're going to be so worried about the one you're going to miss that you're going to miss the crowd.
Exactly.
You're so worried about the guy over here that may or may not be paying attention to you that you're going to miss the crowd, that you do have a chance to, uh, you know, influence or get on the path of right with you. So and the other part of this that you had said that you mentioned there in the beginning was that you weren't very good at, or you didn't feel like capital raising was your call. Like you really just were like, hey, I'm going to go, and this is part of staying in your lane and digging in. So let's talk a little bit about the deal finding, and I think a lot of people get lost in the order of which things need to happen in this particular portion of the model. Um, I think a lot of people think that they should just be able to call up a broker and say, "Hey, man, you got any rental? You got any 200 unit apartment complexes for sale?" No, click, done.
Right.
When in fact, there's a relationship that has to be forged there. I know there is, at least in my sales business. The people that are good to me, they're going to get the deals when I find them, or I'm going to call them first rather, um, and not necessarily even good to me, but just somebody that communicates pretty regular and stays in touch and talks and lets me know what they're looking for today versus what they were looking for last week.
Right.
So talk to us a little bit about that part of it.
Yeah, yeah. I'd say about it was probably around 6 months ago when I really started digging into building broker relationships. And the first few calls, you have to know what you're talking about and
Yep.
project your confidence, because if they smell that, you don't know what you're talking about, a lot of times that's it. And the first couple calls, they ghosted me. And I was like, man, I thought I did really good on that, but I guess not. And so I kind of just kept working at it and building the
Yep.
muscle, and I've gotten to the point where now I can have a conversation with most brokers, and I will get an email or a call back because they can tell that I know what I'm talking about. But it's
Yep.
also, like you said, it's really really important for it's the follow up. You have to keep engaged with this broker so they don't forget about you, because they have a lot of clients that reach out to them all the time. And if you don't keep yourself at the top of the list, you're going to get lost.
And that was so. I said this early on in my real estate sales career when 15 or so years ago. So maybe, I guess it's been 15, maybe it's even longer than that. It's been as many years as many days as you've been alive. How's that? It just seems like it's been however many days you've been alive. That's how many years it's been. But anyway, I always said that from the sales standpoint, via whether it's somebody that's going to buy a property or somebody that's going to list a property, that client, generally speaking, will do business with the last broker that touched them. And while I have continued, and this was early on when I like made this defining thought, and I didn't realize at the time how defining it actually was until now. Looking back, I'm like, man, how many times has that rung true over all the years? And I'm talking about people that are like your family. I'm talking about people that like you would expect, hey, I saw that guy 2 weeks ago, or I saw that guy back at Christmas. It's now June, and I saw him and they do business with somebody else, and you're like, what? You just, it makes you want to pull your, as you can tell, do you see that? There is no hair there. My hair is all gone because it's all pulled out. And so once I figured that out, and that's kind of a sentiment for business in general, um, to what you're saying about the broker relationships. And it's the same way, because the guy that's going to get the deal from that broker is going to be the last guy or lady that talks to him. And they're going to be like, "Oh man, hey, I need to call Alex. He was looking for something just like this." And unless you're that last guy that touched them, or lady, you're at a you're coming in at a disability from the beginning. I mean, you're being disabled before you ever get started.
Right. And it kind of goes like this. And I wasn't the person who came up with this, but I thought this was like a really good nugget. People will do business with who they know, who they like, and who they trust. And so you have to get in on all three fronts. If the broker doesn't know you, they're not going to call you. If they don't like you, they're not going to call you. And if they don't trust you, same thing, they're not going to call you. So you have to, and it takes time to build all those things, right? The first phone call, that's when they know you. After time, they realize that maybe they like you. And over, maybe even months, they say, okay, I trust this person. I'm going to give them good deals, and I want to close with them.
Know, like, and trust. That is the those are the pillars of which basically business in general is built. Know, like, and trust. And because and it took me a long time to figure that out, and especially through the syndication game. And as you'll find out as business goes on, that there is some people that get up every damn morning and they look for trouble every day. It's
Yeah.
like they don't have any problems. Everything's good. Life's easy. No issues. Kids are happy. Wife's happy. Dogs are healthy. The whole 9 yards. And they get up and they just get pissed off and they look for trouble every single day. And but those same people get along with a certain sect of people. Does that make sense? So it's like, okay, when they come at me, I'm like, listen, we don't, no. This is not, no, we don't need trouble over here in this corner. Okay. You go find the people that you resonate with. And that's where no like and trust can work both ways, because in capital raising, especially, we all think that, just like I said, we all think that we need to jump right in and we need to just be anything and everything for everybody, instead of knowing when to say, yeah, I don't want this. And it's the same
Right.
scenario with that.
Right. And it's the same philosophy between people. You narrow it down. You narrow down deals, right? And brokers and markets. You can't look
Yep.
across the entire United States. Your
Yeah.
brain would explode with information. So you
Well, your
really,
underwriting, not to mention your underwriting standards. I mean,
oh yeah,
it's irresponsible.
of course, you have to get granular with everything.
And you have to know, and that was the same, that's the same thing. Well, what if I'm focused on Dallas, but a massive deal comes up that's just a stellar deal in Detroit? Well, those are two different markets, and what might seem like a deal to you while you live in Pittsburgh, what might seem like a deal to you in Detroit, the Dallas market, and it may not be a deal in Detroit. It may be, there may be any number of different outlying factors that could come into play there.
Right.
So again, it's the finding that niche, digging way down in it, and when you get to the bottom, dig further. And they, Russell Brunson, one of the greatest marketing minds of all time, or at least one of the greatest I'm trying to think how to put this. He knew how to relate the content in ways that people could understand. Instead of talking way up here, he got down on all our level and was like, "Hey, this is where the majority of the people are. We're going to talk." So what I'm getting at is that's just a lot of the things that he does, and he just says you have to get down. So
Yeah.
so tell us a little bit about these broker relationships. Like obviously there's a funnel that's attached to them, some form or fashion. Tell us a little bit about your exact process. You don't have to give locations or anything like that, because you want to invite competitors right in here on the show. But tell us a little bit about how that process starts, and then what type of follow up stuff you've put in place.
Yeah. So I think it really starts out with the mailing lists. Believe it or not, I
Mm.
go on like one of the big brokerages like Cushman and Wakefield, and I will, sign up for the mailing list and say it lets you select your profile. So I say, okay, I want the Southeast United States deals over 50 units and value add, right? And then all those deals then come to my inbox as soon as they get listed. And so if I don't have a relationship with the broker on that deal and I want to look at that deal, I'll just reach out to the broker and say, "Hey, I'm interested in this. Can we get on the phone and, talk about it?" And, typically from there it progresses. Maybe we say, actually, so far all we've said is, "Okay, this deal isn't for us. We did the underwriting. It got past so many stages and it didn't work. Do you have anything like it? Because I'm interested in everything that looks like this deal." And
Yeah.
so, over time, you build a relationship, you filter through a lot of deals, so you get experience underwriting. And, on a couple deals, you get really close, you put in an offer, maybe you don't win the offer, but either way, the experience really helps build your brain muscles almost.
Well, and that broker then knows too that you're that that's how they make their money too, is by not just executed LOIs, but you don't get an executed LOI without a submitted LOI.
Right. And they know that they only make money when you close. And so if they
Right.
know that you came to do business and that you're, responding to their emails, you wouldn't believe it, but apparently a lot of people, when they first reach out to a broker and the broker gets back, they just don't respond.
Yep.
So if you can be the person that does respond to that broker and you're quick to reply and you always are there to bounce back off of them, they will want to do business with you.
Yep. Now, what types of property classes are we talking about? Um, just give us a few. Like, well, what are you all mainly looking at, or putting forth in your business right now?
Uh, Really, B and C class value add,
Okay.
multifamily only.
Gotcha.
But right now, we're kind of looking at almost branching out a bit to maybe, you know, stuff that isn't so heavy value add, because value add, you have to dump a lot of money in at the beginning, and that can
Yeah.
affect your returns and your cash on cash. And in a wiry time like we're in right now, people want certainty and they want safety, especially
Yep.
with their money. And so we're having to look at things that maybe appeal to our investors better for the current time.
Yeah, yeah, and that's so right, because there's so much out there, and there's again the uncertainty, and that kind of leans in towards a little bit towards the capital raising side, where we're creating the certainty, and you have to find the product that creates that certainty for your investor, and that doesn't mean find any property and then create a marketing package around it. That means find a property that really truly does do your investors money justice, so that they can obviously increase their net worth or increase their cash flow or whatever the case is. So
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
B and C class value add multifamily only, and so that's the beginnings of where you start niching down. Now, tell us what are, obviously we all know some of the well, most, I guess we all know all of the big marketing numbers, the IRR, the cash on cash, the equity multiple, the all of that kind of stuff. But what are some maybe things that you all or you look at when underwriting that maybe might be considered different?
Yeah, there's a couple things that we look at. They're mostly for getting lending, but they also help to paint a picture of what this deal might look like should things go south over a period of time. And
Sure.
that is the default ratio and the break-even economic occupancy. So they show at what point, you know, below current income, the property will go into default on the mortgage, or you can't pay the debt service, and
Sure.
then break even. So if you are expecting 15% IRR over the whole period, your break even economic occupancy is where your occupancy is to achieve a 0% return. It's pretty
Yeah.
simple,
Sure.
self explanatory, but
Sure.
we find that those are really good because what generally you want those to be in a safer spot. And especially right now when things are so uncertain, it's good to see good numbers there because it shows that you have some room to weather the storm when it comes.
Yeah. Yeah, and I've talked about it a lot on this show, especially in the last, I mean, month or two, or even 6 months. Well, I haven't, and so, but the thought that we have yet to see how the capital raising side, my company types, um, are going to raise capital for something that has an immediate negative return. And I'm talking about negative cap rate, just right off the get go. You're like, okay, so then how do you market that as being the lesser of all of the evils of losing money? So you either lose money in the bond market, or you lose money in, or not necessarily lose money, but you, with the real estate side of it, you obviously have the potential for the upside of
Right.
value or whatever. But what do you all find our most investors are looking for right now, as far as, I know safety and that kind of stuff, but from from a specific, like, what are your guys telling you that, like, hey, this is what we need to kind of be looking for right now because this is what I'm getting feedback that people want?
Yeah. So obviously, inflation is a big thing right now. So their main goal is beat inflation, because when you have a lot of money sitting in the bank, inflation is your number one expense. It's eating away at it every single day, month by month.
That's a non-tax deductible expense too.
Yeah, exactly. I mean, because everyone loses money. So if you, right now, they just want to be the person who beats the system and doesn't lose that money.
Yeah.
But our investor profile right now, we have a couple of high net worth investors who they also just want tax write offs, because obviously over the last couple of years, everyone has made a lot more money than previously, which comes with a higher tax bill. And so being able to write that off is helpful.
Yeah. Yeah. And then passing that through on the K1, and at least there is some strategic thought process behind taking the deduction today. We all know that you have to pay it back eventually, but basically taking care of everything for this year. And that's the way I think a lot of people go, I'm going to take care of things for this year, this year, this year, this year, this year. Then I'm going to worry about next year.
Right.
And so it all kind of comes into play there. But, and that's, I guess, two different plays, what somebody's looking for this year or whether somebody's looking to say, hey, I just want overall tax savings or whatever. So, well, tell us. I'd like to hear just a little bit more. You said you started on the mailing. You would get on their mailing list and say, "Hey, anything like this, we're interested in." At what point do you start circling back through those that you talked to, or those that you got, some stuff worth analyzing?
Yeah, I mean, a lot of times the same brokers will have, listings. So if I keep getting listings, I'm consistently talking to them because they have those listings.
Yeah, yeah,
But if that's not the case, every once in a while, every few weeks, maybe once a month, I'll just shoot an email over their way and say, "Hey, do you have anything? If not, I'd love to discuss like what your thoughts are on the current situation." And
yeah.
that's really because even if they don't have a deal to talk about with you, it's still you still need to keep up that relationship.
Yeah. 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 Because, like I said, you're still wanting to work down. And then this is, and everybody wants that tip that's going to find them an off market property. And if you want a tip that's going to find you an off market property, this was it. This was it. Create that relationship. Let that broker know that you're serious. And if you're serious about buying and closing on a piece of property, and they know that, then there's nowhere to go but up from there.
Yeah.
Because at that point, you're like, hey man, I'm serious about closing this property. And then you're going to get that call back when, hey, so and so just called and we're getting ready. We just found a 200 unit complex that's right up your alley. Everything you're looking for. And do you want a shot at it before it goes on the market? Yes, 100%. Let's go. And that finds that coveted off market property, which again, we hear so much about. And there's so much feedback that we get that everybody's like, do more episodes about finding or helping us find off market properties, or how do you find off market? It's and there it is. That's the key. The key. You wanted it. Bing. There it is. So
Yeah.
anyway, all right, Alex, tell us. We've got a couple of questions that I ask every guest that comes on the show. There's no right or wrong answer. We ask these same questions, and we'd like to get your thoughts. What is the best book that you have recently read or are currently reading?
Ooh, I have the best. This is more specific, but the best book for syndicators, especially ones who are starting out.
Okay.
It is The Hands-Off Investor by Brian Burke, and it's
Okay.
actually not meant for active investors. It's meant for passive investors,
Yep.
but it gives you an incredible look into what an LP is looking for and how
Yep.
to make sure that you structure your deal and protect them and make everyone happy.
Well, and it probably gives you some good. I mean, that's good marketing advice too. When you're not just because you want to sell somebody on an investment, but it's marketing advice to be like, hey, make sure that these things are covered.
Yeah.
Make sure you cover all of these bases. That you're absolutely right. It's a great book. Great book. So, what is a dream vacation that you have either taken or hope to take?
Ooh. I think it's just a vacation. I've been once, but I love the Florida Keys, and so
Okay.
I could spend a month there and just work out of the Keys. That would be awesome.
man, you're like working in a business that could potentially be remote. You're 18 years old. You're knocking on a career, and I mean, move down there and go. What
Yeah.
better time to do it? I
Right.
always get, oh, I got a girlfriend or something like that, and I'd be like, no, who cares? Go, go, go. So, all right. Well, listen, if the listeners out there have heard something that resonated with them, or maybe there's somebody that's younger in the business that wants to maybe get some pointers or chat with you or talk with you or somehow connect with you, what is the best way for somebody to reach out and get in touch with you?
I am most active on Instagram, and you
Okay.
can find me at Mandaro Alex, just last name, first name. You
Okay.
can also find me on LinkedIn. I'm pretty active on there. And then my website, rubiconproperties.com, has everything regarding my sponsorship of investments.
Awesome, man. Well, listen, Alex, it's difficult. I have to admit that I didn't really quite know where we were going to go with this when you said I'm 18, and I got to say I'm pleasantly surprised. I know the listeners are probably pleasantly surprised, and it just goes to show you that and although um, they they just they just don't want people to seems like they don't want people to come right out of high school and like know all of this stuff. Okay, they want to
Yeah.
like keep you trapped in the dorm room and keep you and although I went to college, graduated from college, UP, I never really used my degree for a lot of anything, and basically it became somewhat to this. I'm not saying, I don't even know if you're in school or not, and it's fine if you are, it's fine if you're not, but the mentality of that society has put on, you must do this, this, and this before you can be taken seriously, or before you can, you need to put a bunch of letters after your name. I mean, that's, again, I'm pleasantly surprised at how you're doing, where you're headed, the direction you're headed, and the depth of knowledge that you brought to the discussion. And I want to thank you for your time. Thank you so much, and listeners, if Alex said something that resonated with you, feel free to reach out to me. It just told you right there. Find him on Instagram. He's, I'm sure, more than happy to discuss or help in any way.
Of course. Thank you so much for having me, Casey.
Absolutely, man. We're glad to have you here, and listeners, thank you all for listening today. We hope everybody has a wonderful rest of the day.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.